It happened while you were sleeping, while you were celebrating New Year's Eve, while you were counting down to midnight. Beijing pulled the trigger. January 1st, 2026, today, right now. As I am recording this video, China's new silver export controls have officially gone live. The gates have closed. The weapon has been deployed. They want you to think this is just another regulatory tweak. They want you to believe it's a minor policy adjustment. They want you to scroll past this headline and go back to your champagne. They are lying to you. What happened at midnight in Beijing is not a policy change. It is an act of economic warfare. It is the weaponization of the periodic table. And it is the single most important event in the silver market since the Hunt brothers tried to corner the market in 1980. In this deep dive, I'm going to show you exactly what China just did to the global silver supply chain. I'm going to walk you through the rare earth playbook that Beijing is now applying to silver. I'm going to expose why Elon Musk publicly panicked on X, saying this is not good. And I'm going to prove to you mathematically why $76 silver is not the top. It is the floor. The banks are scrambling, the industrial buyers are panicking, and 60 to 70% of the world whose refined silver supply just got locked behind a government gate. This is the story of the silver weapon, and it just went live. Part 2. The panic begins. If you just watched Part 1, you now understand the weapon. China has implemented a strategic licensing regime that puts government gatekeepers between 121 million ounces of annual silver exports and the rest of the world. But understanding the policy is not enough. You need to see what is happening on the ground. You need to see the panic that is already spreading through the industrial supply chain. Because while the financial media is running year-end retrospectives and 2026 prediction pieces, the people who actually need silver are scrambling. In Part 2, I'm going to show you the industrial panic that is unfolding right now. I'm going to reveal the desperate phone calls being made to mining companies. I am going to explain why Elon Musk broke his silence. And I'm going to walk you through the math of the 230 million ounce deficit that just became unsurvivable. The weapon is deployed. Now watch the casualties. Let me start with the phone calls. 2 days ago, on December 29th, something unusual happened. David Stein, the CEO of Kuya Silver, a Canadian mining company, received 2 separate inquiries from Chinese companies. These were not emails. These were not form letters. These were direct phone calls from Chinese procurement officers asking to buy physical silver. The offer? $8 above the market price for immediate delivery. Let me contextualize this for you. At the time of the call, silver was trading around $76 per ounce. These Chinese buyers were offering $84, a premium of more than 10%. Why would a sophisticated Chinese trading firm offer to overpay by 10%? Because they see what is coming. They understand that the new licensing regime is going to create chaos. They know that once the bureaucracy kicks in, securing export approvals will be slow, unpredictable, and politically fraught. So they are front-running their own government. They are trying to lock in supply before the gates fully close. They are willing to pay a premium today to avoid the uncertainty of tomorrow. David Stein confirmed this to CNBC. It is not rumor. It is not speculation. It is a named source on the record, describing panic buying from Chinese entities. But the Chinese were not the only ones calling. The next day, December 30th, an Indian buyer approached Kuya Silver with an even more aggressive offer, $10 above the market price. At that moment, silver was around $72. The Indian buyer was offering $82. Think about what this means. Industrial buyers in Asia are so desperate for physical metal that they are calling mining companies directly. They are bypassing the traditional dealer networks. They are bypassing the futures market. They are going straight to the source and begging for metal. This is what the early stages of a supply crisis look like. It is not dramatic headlines. It is not crashing prices. It is quiet desperation in corporate procurement departments. It is phone calls at odd hours. It is premiums that make no sense in a normal market. The premiums only make sense if you believe the normal market is about to break. And the people making these calls, the Chinese traders, the Indian manufacturers, they are closer to the ground than any Wall Street analyst. They see the factory floors. They know what inventory levels look like. They understand that the new Chinese licensing regime is not a theoretical risk. It is a gun pointed at their supply chain, and they are trying to dodge the bullet. Now, let me tell you about Elon Musk, because when the richest man in the world speaks, it is worth paying attention. On December 28th, 3 days ago, Musk responded to a post on X about China's silver restrictions. The original post laid out the basics: China implementing new export controls, silver becoming a strategic material, January 1st, deadline approaching. Musk's response was 4 words. "This is not good." He then added, "Silver is needed in many industrial processes." Now, Elon Musk posts hundreds of things on X. He comments on AI. He comments on politics. He trolls journalists. Most of his posts are noise. But this one was different. This was a warning. Musk runs Tesla, the world's largest electric vehicle manufacturer. Every Tesla contains 30 to 50 grams of silver. The battery management systems need silver for conductivity. The inverters need silver. The charging ports need silver. The high voltage cables use silver-coated contacts. Tesla's gigafactories consume millions of ounces of silver per year. And Tesla's solar division, which manufactures photovoltaic panels, uses even more. When Musk says silver is needed in many industrial processes, he is not making a general observation. He's describing his own company's supply chain vulnerability. But Tesla is just the beginning. Samsung needs silver for semiconductor manufacturing. Apple needs silver for iPhones. First Solar needs silver for their cadmium telluride panels. The entire global tech ecosystem runs on silver, and all of these companies have one thing in common. They source significant amounts of their silver from China. When Musk says this is not good, he is not being hyperbolic. He is expressing genuine concern about a supply chain crisis that could affect production timelines across multiple industries. This is not some retail investor on Reddit complaining about premiums at the coin shop. This is the CEO of the most valuable car company on earth telling you publicly that the silver supply chain is in danger. The mainstream financial media buried this story. They treated it as a curiosity. Elon Musk comments on silver was not the lead on any major network, but it should have been, because Musk does not comment on commodities lightly. He has never tweeted about copper. He has never posted about aluminum. Silver got his attention because silver is the weak link in the electrification supply chain. And that weak link just got weaker. Think about what this means. Industrial buyers in Asia are so desperate for physical metal that they are calling mining companies directly. They are bypassing the traditional dealer networks. They are bypassing the futures market. They are going straight to the source and begging for metal. This is what the early stages of a supply crisis look like. It is not dramatic headlines. It is not crashing prices. It is quiet desperation in corporate procurement departments. It is phone calls at odd hours. It is premiums that make no sense in a normal market. The premiums only make sense if you believe the normal market is about to break. And the people making these calls, the Chinese traders, the Indian manufacturers, they are closer to the ground than any Wall Street analyst. They see the factory floors. They know what inventory levels look like. They understand that the new Chinese licensing regime is not a theoretical risk. It is a gun pointed at their supply chain, and they are trying to dodge the bullet. Now, let me tell you about Elon Musk, because when the richest man in the world speaks, it is worth paying attention. On December 28th, 3 days ago, Musk responded to a post on X about China's silver restrictions. The original post laid out the basics: China implementing new export controls, silver becoming a strategic material, January 1st, deadline approaching. Musk's response was 4 words. This is not good. He then added, silver is needed in many industrial processes. Now, Elon Musk posts hundreds of things on X. He comments on AI. He comments on politics. He trolls journalists. Most of his posts are noise. But this one was different. This was a warning. Musk runs Tesla, the world's largest electric vehicle manufacturer. Every Tesla contains 30 to 50 grams of silver. The battery management systems need silver for conductivity. The inverters need silver. The charging ports need silver. The high voltage cables use silver-coated contacts. Tesla's gigafactories consume millions of ounces of silver per year. And Tesla's solar division, which manufactures photovoltaic panels, uses even more. When Musk says silver is needed in many industrial processes, he is not making a general observation. He's describing his own company's supply chain vulnerability. But Tesla is just the beginning. Samsung needs silver for semiconductor manufacturing. Apple needs silver for iPhones. First Solar needs silver for their cadmium telluride panels. The entire global tech ecosystem runs on silver, and all of these companies have one thing in common. They source significant amounts of their silver from China. When Musk says this is not good, he is not being hyperbolic. He is expressing genuine concern about a supply chain crisis that could affect production timelines across multiple industries. This is not some retail investor on Reddit complaining about premiums at the coin shop. This is the CEO of the most valuable car company on earth telling you publicly that the silver supply chain is in danger. The mainstream financial media buried this story. They treated it as a curiosity. Elon Musk comments on silver was not the lead on any major network, but it should have been, because Musk does not comment on commodities lightly. He has never tweeted about copper. He has never posted about aluminum. Silver got his attention because silver is the weak link in the electrification supply chain. And that weak link just got weaker. Part 3, the battlefield analysis. If you have been following this deep dive, you now understand the weapon and the casualties. China has weaponized silver through export licensing. Industrial buyers are panicking. Elon Musk is sounding alarms. And the math shows a 230 million ounce deficit about to get catastrophically worse. But understanding the problem is not enough. You need to understand the battlefield. You need to see how this plays out across different theaters of conflict. In part 3, I'm going to analyze the strategic implications. I'm going to show you how the US government is responding. I am going to explain the coming divergence between paper and physical prices. And I am going to give you the investment playbook for navigating what I believe will be the most volatile commodity market in a generation. The weapon is deployed. The casualties are mounting. Now let's study the battlefield. Let me start with the American response, because the United States government is not sleeping through this. In November 2025, just 6 weeks before China's export controls went live, the Trump administration added silver to the official U.S. critical minerals list. This was the first time in history that silver received this designation. The Federal Register explicitly cited silver's use in electrical circuits, batteries, solar cells, and antibacterial medical instruments. The government classified silver alongside uranium, copper, rare earths, and other materials deemed essential to national security. This was not a coincidence. The timing was strategic. Adding silver to the critical minerals list triggers a cascade of policy options. It authorizes the use of the Defense Production Act to prioritize silver for military and strategic applications. It enables the creation of national stockpiles. It justifies subsidies for domestic mining operations. It opens the door to export restrictions on American silver. The U.S. government saw China's move coming. They watched the licensing regime announced in October. They observed the list of 44 approved exporters published in December, and they prepared their own countermeasures. We are entering a new era of resource nationalism. The post-Cold War assumption that commodities would flow freely based on market prices is dead. Governments are now viewing critical materials through a national security lens. Silver is no longer just a precious metal for stackers and jewelry. It is a strategic asset in a great power competition. And when great powers compete for scarce resources, prices are the last thing that matters. What matters is access. What matters is control. What matters is ensuring your factories can run while your adversaries cannot. The critical minerals designation is the first move in America's response, but it will not be the last. Watch for stockpiling announcements, watch for Defense Production Act invocations, watch for restrictions on silver exports from the United States. The resource war is just beginning. Now, let me explain the divergence that is about to rip the silver market in two. For decades, the spot price of silver has been determined by the futures market, specifically by trading on the COMEX in New York and the London Bullion Market Association. These are paper markets. When you buy a silver futures contract, you're not buying physical silver. You are buying a promise. A promise that at some future date, if you want delivery, someone will give you 5,000 ounces of silver. The paper market works great when there is abundant physical metal to back the promises. It works great when delivery requests are rare. It works great when the vaults are full. But what happens when the vaults are empty? What happens when 60% of the tradable supply is locked behind Chinese export controls? What happens when industrial buyers start demanding immediate delivery instead of paper promises? The paper price and the physical price diverge. We are already seeing this. On December 28th, silver touched $84 per ounce on the futures market. It then crashed to $70 in a single day. Then it rebounded to $76. This volatility is not normal. This is not how a healthy market behaves. This is the sound of a market breaking. The futures price is being set by algorithms trading paper contracts. The physical price is being set by desperate buyers calling mining companies and offering $10 premiums. When David Stein at Kuya Silver gets offered $82 while the screen shows $72, which is the real price? The answer is obvious. The physical price is real. The paper price is a ghost. Over the next 12 months, I expect this divergence to widen dramatically. You will see spot prices on your screen that bear no relationship to what you can actually buy silver for. The COMEX will quote $80. Your local dealer will charge $100. And both numbers will be correct, depending on whether you want a promise or product. This is what happens when paper markets lose their anchor to physical reality. The price discovery mechanism breaks, trust evaporates, and the true price becomes whatever the buyer and seller negotiate in private. If you are holding paper silver, whether through futures, ETFs, or unallocated accounts, you need to understand this risk. When the divergence hits, your paper might be worth far less than you think. Because at the end of the day, paper is just paper. Only physical metal in your possession carries no counterparty risk. Part 3. Elon Musk just panicked. You know it is serious when Elon Musk goes public. 3 days ago, on December 28th, Musk responded to a post on X about China's silver restrictions. His exact words were, quote, "This is not good. Silver is needed in many industrial processes. This is not good." From the man who runs Tesla, SpaceX, and is advising the incoming Trump administration on government efficiency. Why would Elon Musk, one of the most powerful industrialists on the planet, publicly express concern about silver? Because Tesla needs silver. Every Tesla vehicle uses 30 to 50 grams of silver in the battery management systems, the inverters, the high voltage cables. Tesla's solar panels use silver paste. Tesla's Powerwall batteries need silver, and Tesla is not alone. Samsung needs silver for semiconductors. First Solar needs silver for photovoltaic cells. Apple needs silver for iPhones. The entire global tech and energy transition runs on silver. When Musk says this is not good, he is not giving investment advice. He is signaling that the supply chain is in danger. He is telling you that the companies building the future cannot build it without silver, and the country that controls 60% of the export market just put a lock on the door. This is why silver hit $84 on December 28th. This is why it pulled back to $76. The market is trying to price in an event that has never happened before. The weaponization of silver by the world's second largest economy. Part 4. The numbers are terrifying. Let me walk you through the math that should keep every industrial CEO awake tonight. Global silver demand in 2025 reached 1.24 billion ounces. Global supply was approximately 1.01 billion ounces. That is a deficit of 230 million ounces. The fifth consecutive year of structural deficit. Now layer in China's new controls. China exported over 4,600 tons of silver in the first 11 months of this year. That is roughly 148 million ounces. Under the new licensing regime, the flow is now subject to government approval. What happens if Beijing decides to reduce exports by 20%? That is 30 million ounces removed from the global market. The deficit jumps from 230 million to 260 million. What if they reduce by 50%? The deficit explodes to 300 million ounces. And here's what nobody is talking about. China is not restricting silver exports because they want to hurt the West. They are restricting because they need the silver themselves. China is the world's largest solar panel manufacturer. They are the largest EV battery producer. They are building more data centers than any country on Earth. All of these industries are eating silver at an unprecedented rate. The policy is designed to secure domestic supply for their own energy transition. The global market is an afterthought. This means the 44 approved exporters will not be incentivized to maximize exports. They will be pressured to minimize them. Every ounce that leaves China is an ounce that cannot go into a Chinese solar panel. The export licensing system is not a tap that can be turned on. It is a valve that will slowly close. Part 5. The U.S. response. Do you think the United States is not paying attention? In November, just 6 weeks ago, the Trump administration added silver to the official U.S. critical minerals list for the first time in history. Silver is now classified alongside uranium, copper, and rare earth elements as a material critical to national security and economic stability. The Federal Register explicitly cited silver's use in electrical circuits, batteries, solar cells, and antibacterial medical instruments. The government sees what is coming. This is not a coincidence. Adding silver to the critical minerals list in November, right before China's controls go live in January. The timing is strategic. The U.S. is preparing for a resource war. They are positioning silver as a matter of national security. And when silver becomes national security, everything changes. Defense Production Act invocations, stockpiling programs, export restrictions of our own, priority allocation to military contractors. The days of silver being a retail stacker's hobby are ending. Silver is becoming a strategic asset contested by superpowers. And the price at $76? That is the price before the governments fully mobilize. That is the price before the defense departments start panic buying. That is the price before the real scarcity hits. Part 6. The industrial panic. Let me tell you what is happening right now in corporate boardrooms around the world. 2 days ago, on December 29th, 2 Chinese companies contacted Kuya Silver, a Canadian mining company, offering to buy physical silver at $8 above the market price. The CEO, David Stein, confirmed this to CNBC, $8 above spot. That is a 10% premium for immediate delivery. The next day, an Indian buyer approached the same company offering $10 above market price. This is what industrial panic looks like. It is not hedge funds buying futures contracts. It is physical buyers with factories to run, calling miners directly, begging for metal at any price. Samsung, Tesla, First Solar, they do not care if silver is $76 or $86 or $100. They care about whether they can get it at all. When China closes the gate on 60% of global supply, the remaining 40% becomes the most valuable commodity on Earth. And every industrial buyer on the planet is now competing for scraps. This creates a feedback loop. Higher prices attract more attention. More attention brings more buyers. More buyers drain the remaining supply faster. The vault's empty, premiums explode, and the spot price becomes meaningless because you cannot actually buy silver at spot. We saw this pattern in the transcript of the previous videos. The divergence between paper and physical, it is accelerating. Part 7, the price roadmap. So where does silver go from here? Let me give you the roadmap based on the China scenario. Stage 1, the absorption phase, $76 to $90. We are in this phase right now. The market is absorbing the news. The weak hands who panicked during the pullback from 84 are being replaced by strong hands who understand the structural shift. Industrial buyers are placing standing orders. Every dip gets bought. The floor rises. Within the next 30 days, I expect silver to test $90 as the reality of restricted supply hits the futures market. Stage 2, the mainstream awakening, $90 to $120. This is when CNBC runs the segment every night, when your coworker asks about silver at the water cooler, when the local coin shop has a line out the door. At this stage, retail FOMO meets industrial desperation. The price accelerates. Silver becomes front page news globally. The gold to silver ratio collapses from 40 to 1 toward 30 to 1. Stage 3, the supply crisis, $120 to $150 plus. This is the unobtainium phase, when refineries halt because they cannot source feedstock, when dealers close their websites, when the government starts talking about intervention. At $150 silver, every solar panel costs $50 more. Every EV costs $500 more. The green energy transition faces a material crisis that cannot be solved by printing money. This is not a prediction. This is the mathematical consequence of 230 million ounce deficits, meeting 60% supply restrictions. Part 8. What you need to do. If you're watching this video, you are already ahead of 99% of the world, but knowledge without action is worthless. Here is the strategy. Number 1, accumulate physical metal now, not tomorrow, not next week. Today, the premiums are going to expand, the inventory is going to disappear. Every day you wait is a day closer to the coin shop putting up the "oh, sold out" sign. Buy weight, not numismatics. Buy bars and recognized bullion. Maples, Eagles, Britannias, kilobars. Your goal is maximum ounces before the Chinese gate fully closes. Number 2, look at the miners. The mining companies that produce silver in safe jurisdictions, Canada, United States, Australia, are about to become the most valuable assets on the stock market. When China restricts exports, the Western miners become the only reliable supply. Find companies that are unhedged. Find companies with primary silver production. Find companies in Tier 1 jurisdictions. This is where the 10x and 20x gains will come from. Number 3, ignore the volatility. There will be days when silver drops $5. The banks will try margin hikes. The media will scream bubble. The algorithms will paint scary candles. None of it matters. The Chinese government did not implement a strategic licensing regime so they could reverse it next month. This is a multi-year policy shift. The structural change is locked in. Hold through the noise. Focus on the fundamentals. The periodic table does not care about your feelings. Part 9. The final message. January 1st, 2026. Today. The day the silver market changed forever. For decades, the West took silver for granted. They assumed the Chinese would always sell. They assumed the supply would always flow. They assumed the price would always be managed. Those assumptions died at midnight Beijing time. Silver is no longer just a precious metal for stackers and coin collectors. It is a strategic weapon in a global resource war. It is the critical material that powers the energy transition. And it is now controlled by a government that has explicitly stated it will prioritize domestic needs over foreign buyers. Elon Musk said, "This is not good." He is right. For the unprepared, this is not good. For the industrial giants who did not secure supply, this is not good. For the Western governments who ignored the warning signs, this is not good. But for you, for the person who understands what just happened, for the stacker who has been accumulating while the world was sleeping, this is the moment you prepared for. The gates have closed, the weapon is deployed, the countdown to $100 silver has begun. Hold the line. Stay stacked, and welcome to 2026. The year silver became a matter of national security. Subscribe.